Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia. Today, our webinar title is Calls and Puts to Supercharge Your Investment. So my name is Shane Chu. I'm the moderator for this session. Now, structured warrants are tactical tools to help us to gain leverage exposure, be it in a bull market or in a bear market. So even though when the times are bad, we can also use put warrants to help us to fulfill our hedging purpose or to help us to make money even in a bear market. So today we're going to examine what are these call warrants and put warrants and how we can use them to supercharge our investment. Of course, structured warrants also come with a great deal of risk. So it's of paramount importance that we learn what are structured warrants before we trade them. Disclaimer in this webinar is whatever we share in this session is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Allow me to briefly introduce our speaker today. He started off in the banking industry as a management associate covering departments such as corporate banking, group strategy, and asset management. Currently, he's a senior analyst in the equity and commodity derivatives division of Maybank Investment Bank, which is a leading issuer of structured products and structured warrants in Malaysia. Notably, he has conducted more than 12 webinars and seminars with over 700 clients, even with only 1 year of financial market experience. On top of that, he's the core content curator for Maybank IB's Telegram channel, Trade with Maybank, catering to the readership of more than 10,000 subscribers. He's passionate about the market and has the zeal to educate investors. He holds a bachelor's degree in international business from Help University and a CMSR dual license holder for dealing in equities and derivatives in Malaysia. He's none other than Mr. Tucker. Tucker, how are you today?
Hi, great. Thank you for the kind introduction, Shane. I'm happy to be here. And it's wonderful to see so many people attending this webinar tonight.
So it's our honor to have you here today. So without further ado, let me just hand over the session to you. I will stop sharing my screen and you may take it over.
All right. Thank you very much, Shane. So just give me a moment to share my screen. Okay, I think everyone can see my screen, which is the order of business for this evening, right?
Yes, perfect.
Okay, great. So without further ado, thank you very much, Shane, for introducing me. My name is Tucker. And like what Shane mentioned, structured warrants allow you to have an additional tool in your investment pocket, right? To supercharge your investments or even to hedge your portfolio. So today, I will be going through how it supercharges your investments and what you should look out for before investing into structured warrants. And we'll go through some case studies of some call warrants, put warrants, as well as gaining access to foreign underlying, such as US and HK listed shares, or even US and Hong Kong indexes. All right. So today, the key thing that we'll be touching is trading of warrants and its significance in the market, because structured warrants provide you as an investor a unique and powerful way to enhance investment strategies, allowing yourself to take advantage of market fluctuations in a flexible and also controlled manner. So understanding warrants is like having an extra tool in your investment toolkit. It offers you opportunities to capitalize on market movements, manage risks, and also, of course, generate profits. And especially in today's ever-changing financial landscape, structured warrants provide a unique way for you to navigate market fluctuations and potentially achieve your investment goals. But like Shane mentioned earlier, the complexity and volatility of structured warrants trading require careful planning and thorough understanding of structured warrant. So some of you here today may consider structured warrants as an alternative investment as opposed to traditional shares, especially when it's beneficial to you if you find yourself in some of these situations, such as limited capital because you have a restricted budget for investing in shares. Structured warrants can actually offer you an attractive option for this. Lower transaction costs because with a smaller capital outlay, structured warrants involve reduced transaction costs and commission compared to investing directly in shares. And also number 3, diversification, because if you're looking to diversify your investment portfolio, structured warrants allow you to do so. And also lastly, capital flexibility, because sometimes you only have X amount, a finite amount of capital, and you want to unlock your capital tied up in shares while maintaining your exposure to the specific underlying. Considering these factors, right, structured warrants can actually be a suitable alternative for your investment needs. So let us explore this further and uncover the secrets of successful warrants trading together. So, unleashing your investment style and horizon for maximum returns. Because before you begin trading warrants, you might be unsure of which warrant to buy, whether is it deep in the money, near to expiry, high effective gearing, or high sensitivity. So sometimes you may ask yourself, are you a day trader or a medium-term contrarian? So knowing your investment style, it allows you to make the best out of your warrant trading, because it's crucial to remember that warrants are leverage tools. This means that while they can magnify your potential profits, they can also amplify losses if the underlying assets move against your expectation. For that reason, it is important to recognize your investment style and horizon when it comes to warrants trading. Setting a target level for the underlying share is essential, since structured warrants are designed for short-term trading with an expiry date. And especially there's no two traders who have the same investment style and horizon. And once you know your investment style, you can make better trading decisions in trading structured warrants. Because as the saying goes, no one knows you better than yourself. And today I'd like to bring 4 common investment styles, which are risk taker, trend follower, day trader, and contrarian investor. So let's go through each one. So firstly, we have the risk taker. And risk taker trading style usually goes for all or nothing, high risk, high reward sort of trading position. Risk taker seeks for sharp event-driven movements in share price, such as when the Federal Reserve rate hike, or when the government announced that there will not be any physical road tax anymore. And also, this sort of trading position is also held for a short period of time. And the size of this kind of trade is also sized in preparation for a max loss scenario, okay? In preparation for a max loss scenario. Because as a risk taker, you are ready to lose all your capital at risk in exchange for an outsized and exorbitant profit opportunities. And next up, we have the trend follower. And the name suggests the trend follower believes that the trend is your friend until the end when it bends. So typically, the trend follower will participate in an established share price trend, whether an uptrend or downtrend, because trend followers follow the trend and they anticipate a continuation of this trend for maybe the next 1 week, 2 weeks, or even the next month. And trend follower trading style looks to ride on share price momentum over the short to medium term to realize more predictable price patterns. So trend followers usually use technical analysis, right, to draw your trend lines, your resistance and support levels. And thirdly, we have day trader. And the day trader, as the name suggests, usually they hold a position within the day. They get in and out quickly. And sometimes, right, they might hold it for 1 or 2 days, which is still considered quite a short term. And the day trader's objective in this case, right, this investment style, is to scalp for quick profits within a defined stop loss and using structured warrants that react within a day, okay, or even a short-term spike in the underlying share price. And of course, lastly, we have the contrarian investors. So contrary to popular belief, right, this is what the contrarian investors believes in, because they hold an opposing view of the expectations in the market right now. So the contrarian investors seek for oversold or even beaten down shares, or even overbought or highly rallied shares in anticipation of a looming correction, or even a retrace or backtest correction back down. So they seek for shares that are ripe for reversal sometimes you may see that you can go to your Bursa trading platform and you can look for your top losers or even your top gainers. And there you can have a general idea of what underlying shares have been overbought or oversold. So these type of investment, the investor style, they invest slightly to a medium to a longer term to watch their strategies play out. And one may also adopt the dollar cost average, in short DCA, to average down its entry cost through having a lower weighted average price. All right. And now, once you have recognized your investment style and horizon, it is also time to know what's your risk appetite, whether you are risk averse or you're a risk on trader. Because by understanding your risk appetite, you can determine which type of warrants are better suited for you and also the associated risk. Because risk here involves your capital and also your time horizon. Knowing your risk tolerance is very crucial when trading structured warrants. Being prepared for potential losses is part of a prudent structured warrant strategy. Therefore, successful warrants investors usually focus on a select number of shares and closely monitor a few warrants within that selection. So here I'm trying to tell you that having a disciplined approach to trading helps you to navigate the complexities of warrant investment. And let's begin with the risk taker. And in the previous slide, we've explored that the risk taker goes for all or nothing short-term trade. And this type of investors, they usually look for structured warrants with the highest gearing due to its low warrant price. Because gearing here is basically a multiplying factor, which symbolizes the amount of capital otherwise required for a structured warrant holder to gain the same exposure to the underlying share. A high gearing provides the risk-taker investment style and even more leverage exposure over the underlying share through structured warrants. But it is important to remember that highly geared structured warrants takes a sharp share price swing in order to influence the warrant price because it has the lowest form of sensitivity. So what this means is that it takes more ticks in the underlying share in order for the structured warrants to move by one tick, okay? And next we have the trend follower. And the trend is always your friend until the end when it bends. Because this investment style, the trader tend to go for structured warrants that have the lowest gearing. This is because that these type of structured warrants, which has low gearing, tend to have a higher sensitivity. And this allows the structured warrants to track the underlying share price closely. As a result of this, when you have a low gearing, that means a low leverage structured warrant, the structured warrant's price in turns is also higher. And of course, thirdly, we have the day trader. And since the day trader goes for intraday or short term of 1 of 2 days trading positions, the day traders will typically go for structured warrants with a bit of medium to high gearing to obtain the needed amount of leverage for its day trading position. And furthermore, the day trader will look for structured warrants that have moderate sensitivity in order for them to realize gain within a day. And with the moderate sensitivity, underlying share price swing of between 5 to 10 cents, or what this means is 5 to 10 ticks in a day, allows the structured warrants to capture a certain degree of share price patterns. And as for the last one, contrarian investors, the investors that goes for the opposing view of the market, they usually would go for structured warrants that is low to medium risk. And also, of course, they are longer time to maturity because they require a little bit more time to see whether the strategies play out or not. So in this case, this means a further expiry date and not a short-dated one. So this type of investment style tends to be medium to long-term in nature because this would allow the oversold or overbought shares to actually correct or retrace back and in order to develop an opposing trend. So contrarian investors would usually sit out quite some time to wait for the strategy to play out over time. And one thing I'd like to bring to your attention here is the amount of gearing is underpinned by the structured warrants price. So when gearing is high, the warrant price is low, providing higher leverage and vice versa. And structured warrants that are with high gearing tend to be out of the money, because how gearing is calculated is basically taking the underlying share price divided by the warrant price multiplied by exercise ratio. So when the underlying share price, you divide by the warrant price, which is low, this in turn gives you a higher gearing, hence a higher leverage. And while those that are low gearing are in the money, because when the warrant price increases, the warrant price component here goes higher. And when you take the underlying share price divided by it, your gearing will become lower. So this reduces the leverage effect of structured warrants. But you don't have to worry. A lot of this effective gearing sensitivity, break-even price, and expiry date are all available on the issuer's website that is available out there. Okay. And I see one question, warrants same as options. To Chihen, we will answer this later on during the Q&A. So just to make sure that you know that it will be addressed. Okay. So moving on. Once you have identified your investment style and horizon, and also understand your risk appetite, so what's next, right? Next is really how you choose or how you pick the right warrant for your investment style and horizon. And as discussed in the previous webinar, a critical aspect of warrants trading is the importance of market direction. And structured warrants allow you to profit from either direction because it has call warrants and put warrants. And of course, with put warrants, it allows you to capitalize on the downside. For example, with the Hang Seng Index, with the Hong Kong market going down due to China introducing a lackluster stimulus, okay? And this aspect here highlights the dynamic nature of warrants and the significant role that the market movements play in determining the success of your trade, okay? There are 4 key things that I'd like to share with you when you want to select your structured warrants. Number 1, options and timing. One of the key factors that can greatly influence the outcome of a warrants trade is the timing of your entry and exit. And unlike shares, warrants have a limited lifespan. So because warrants comes with an expiration date, you have to time your entry and exit by being aware of the expiry date. So this means you must carefully consider when to enter a trade to give yourself enough time for your investment thesis to play out. You can't get into a trade with a warrant that is expiring next week, for example, because it might expire out of the money, or even if it expires in the money, you may not be due for cash settlement, okay? And number 2, expiration date matters, okay? A warrant's expiration date is like a ticking clock, because if your market prediction does not play out or materialize before the warrant expires, it may become worthless, like I mentioned. So this results in a loss of the premium you have paid, meaning to say the capital that you have forked out to buy the warrant, okay? This is why choosing the right expiration date is a balance between giving your trade sufficient time to develop and minimizing the effect of time decay, which is the gradual reduction in a warrant's value as it approaches expiration. So just a quick refresher is that time decay accelerates when the warrant approaches expiry. So when it's first or newly issued, time decay isn't as fast, but as it approaches expiry, time decay will accelerate. And number 3, market direction, and also what is your prediction? Because when it comes to trading warrants successfully, you have to have a clear understanding of your market direction. Because ask yourself this, are you anticipating the share to rise, fall, or remain sideways? Okay, because your market view dictates whether you should be considering call or put warrants. You can't be buying a put warrants when you're having a bullish view, and you can't be buying a call warrant if you have a bearish view. And also, of course, lastly, how it helps you to select a warrant is through using technical and fundamental analysis. Why? Because in order for you to make an informed market decision, investors often rely on a combination of technical analysis, which is studying the price charts and also pattern, as well as fundamental analysis, such as evaluating economic indicators, company performance, and also macro news. Because these two, TA and FA, help you to inform your choices, giving you a better understanding of potential price movements and trend. So all in all is that effective risk management involves considering various scenarios and adjusting your warrant strategies accordingly. And as we proceed further on in this webinar, we'll explore some real-life examples and strategies that maybe showcase the practical application of these principles. Okay, so before I move on to the next slide, it is key to remember that call warrants value goes up when the underlying share price go up, while for put warrants it is the inverse, because put warrants value goes up only when the share price, underlying price, goes down. Okay. I see CC Go saying that slides are not moving. Just a moment. I think it should be all right. Is everyone else okay with the slides? Can just give me a thumbs up. Okay, I see a few thumbs up. That's great. Okay, so moving on. So by now, you have already understood your investment style, your horizon, your risk appetite, and also the difference or importance of having a market direction that is bullish or bearish. And once you have known that, you've already set your market view and already got your trading thesis. So what's next? So next here is to actually select the warrant that is fit for your trading thesis. And let's take an example of the recently hotly traded or most active underlying UEMS as an example. So on this screen here, you can see that on 21st June, UEMS Sunrise was actually highlighted as a technical accumulate by our senior chartist. And our senior chartist actually identified the resistance level being 30 cents and 35 cents, whereas the stop loss is placed at 24 cents. So on 21st June, UEMS opened at 26.5 cents and UEMS C82 bid was 2.5 cents. So at that point, UEMS provides you with a gearing of 21.2. And this represents the leverage that the warrant offers. Okay. And let's just say you enter into a position in UEMS C82 with 1,000 ringgit in capital. So this translates to roughly 40,000 units of UEMS C82. And with its exercise ratio of 0.5, this effectively gives you an exposure of 80,000 shares of UEMS. So with just 1,000 ringgit in capital, you are effectively gaining exposure to 80,000 shares of UEMS. Whereas if you were to use a 1,000 ringgit capital to purchase the UEMS share, you would end up with only 3,700 units of share. So on 3rd July, if you notice, UEMS recorded a traded volume of 10 million, and which is above the 20-day moving average. So on 10th July, okay, UEMS closed at its intraday high of 34 cents, which is almost to the second resistance level based on our senior chartist. So the volume also ballooned to 41 million. So typically, volume gives you a confirmation that the trend is intact, is in line, but you feel that the share price has rallied quite a fair bit and you like to close your position on this. So by utilizing UEMS C82 from entering from 21st June to 10 July, this would have resulted you in a profit of 300% because UEMS C82 bid went to 10 cents, right? While UEMS share would have returned 28.3%. So this showcase how a call warrant works when your direction of the underlying plays out correctly. So what about now, right? Maybe you have noticed that the market right now, that UMS C82 price is almost the same as UMS share price itself. Capital at risk would almost be identical at this point, while if you were to purchase UMS C82, you run the risk of it expiring worthless. So might as well you purchase the share even because it doesn't have an expiry date. But recently there was a UMS C87 as issue, and the price of it is only a fraction of UMS shares price. So this allows you to limit your capital at risk if you wish to participate in the share price movement of UEMS. So let's just compare between the two call warrants term of UMS C82 and C87. Okay, so here this is a table between UMS C82 and C87 warrant terms. And let's just assume that the share price is trading at 0.53 cents. You may see that right off the bat, UMS C82 is deep in the money because its exercise price is 30 cents, while UMS C87 is considered slightly out the money of 2 cents. Okay, but given that UMS C87 is a recently listed warrant, the expiry date is next year, 28 June, while C82 is about to expire in about a month's time. So you can see that UMS C82 will have an accelerated time decay, which I will explain later on. So if you look at this too, the exercise price at 30 cents, which is deep in the money, as compared to C87 that is slightly out of the money, the deep in the money one would cost you a bit more because the warrant price will be higher, given that it's in the money, it has intrinsic value. Whereas for the C87, it only has time value, but though it's only slightly out the money. Okay, so in that case, UAMS C87, the warrant price will be lower. Okay, and let's move on to exercise ratio. So you can see that the C82 has a lower exercise ratio of 0.5. So meaning to say, for every 1 unit of C82 you buy, you're effectively gaining exposure to 2 UMS share. But for C87, you notice that the exercise ratio is higher at 2. So what this means is that in order for you to replicate 1 UMS share exposure, you have to purchase 2 C87 warrants. So what is this exercise ratio? Exercise ratio main role is to divide 1 warrant into smaller units, making it cheaper for investors to enter. So for instance, 1 ringgit value warrant becomes 50 cents when the exercise ratio is 2. But the warrant exercise ratio is important when you want to calculate sensitivity, because the warrant's price sensitivity to underlying changes is gauged by delta per warrant. So what this means is lower exercise ratio means pricier warrants with higher delta, and higher ratio means cheaper warrants with lower delta. Because delta, you have to divide it by exercise ratio, you will get your delta per warrant, and that's how you effectively count sensitivity. So in essence, if you're looking for something that is more sensitive to the movement of the underlying, you should look out for exercise ratio that is a bit lower. Whereas if you want something cheaper from a price point, you can look for warrants that has a bit of a higher exercise ratio, because the absolute price of the warrants will be cheaper. Okay, so moving on to the delta. So delta, just to refresh your memory a bit, delta basically tells you the probability of this warrant expiring in the money. And given that UMS C82 is going to expire in about a month's time, and the exercise price is at 30 cents, while the market is at 53 cents, it has a 91.1% of delta, meaning that it is highly probable of it to expire in the money. But for C87, it's only 2 cents out of the money, and it has a 65.4% of delta. So you can see that the delta here tells you the probability of the call warrant expiring in the money. And of course, for call warrants, is from 0 to 100%. So the higher it is, the higher the probability of it expiring in the money. And that's what it's going to tell you, right? So delta increases when the call warrant gets deeper in the money. So one way to read delta sometimes is also that when your share price is higher than the exercise price, your delta will keep getting higher and higher. So in this case, if you remember just now when I mentioned the exercise ratio where we will have delta per warrant, so once it gets deeper and deeper in the money, your delta goes higher and higher. So your delta per warrant will also go higher. And this means that the sensitivity of the call warrant will also increases. So deeper in the money call warrants will behave like the underlying share as it approaches 100%. So therefore, you can see that the C82 in the market mimics the UEMS share price closely because it is very deep in the money. All right. And you can see that the ticks here is 0.5. So what this means essentially is that for every 0.5 cent movement or lesser, UMS C82 will move up by 1 tick, whereas for the C87, it takes about 1.5 cents for it to move by 1 tick. So if you're looking to be a day trader or a trend follower, you can consider something like C82. Whereas if you have a more longer term strategy, right? Such as, for example, UMS announced its results yesterday, and they have good prospects ahead, and you like to purchase now the warrant in anticipation of its next quarterly report. So you may consider UMS C87 instead, because from a price point, it is cheaper, and also that the expiry date is also further. Okay, and one thing you can notice here is that there is something called implied volatility. Okay, what implied volatility here means is actually it is used to actually compare the warrant price of similar warrants. Think of it like a PE of a company within the same sector. You can actually screen through the same warrants of the same underlying, and if you want to know whether it is expensive or not, relative to the other similar call warrants, you can look at its implied volatility, because implied volatility here means the anticipation of the market, right? The anticipation of the market of the future direction or movements of the underlying. So a higher implied volatility means more expensive, whereas a lower implied volatility means less expensive. Okay, so the higher the level, the more expensive the warrant, with considering other factors held constant. So it can be said here, C82 is more expensive than UMS C87, right? And one thing I'd like to highlight, a part of the premium and effective gearing, is the theta days. Remember how I said when a warrant approaches closer to its expiry date, the time decay accelerates. So here in us as an issuer, we actually express it as theta in days. So how do you read it is, for C82, you may see that it is 7 days. So this means that UMS C82 will reduce by 1 tick in every 7 days. And this is apparent because it is going to expire soon. So the time decay will accelerate, and the time value left in C82 is lesser. Whereas if you look at C87, the theta days is higher at 36. So meaning to say, if you bought it today, okay, when theta days is 36, you will experience a time decay, or your C87 losing 1 tick in 36 days. So this is because C87 is a newly listed warrant, hence time decay is still rather slow. So if you don't believe me, you can actually keep a lookout on C87, and as it approaches next year, right? Maybe May 2024. You may see that the theta days actually will reduce to a single digit, okay? And let me just backtrack a bit to premium, okay? As for premium, and it's also known as the break-even price, C82 has a lower premium than C87 at 2.5% versus 45.5%. What can be understood from this is that if you purchase UMS C82, UMS shares needs to only increase by 2.5% at maturity in order for you to achieve break-even. So as a consequence, it actually takes lesser for UMS C82 to achieve its break-even point as compared to C87. The reason being is because C87 has a higher exercise price of 55 cents. And when you add on to the cost of purchasing the warrants multiply by the exercise ratio, this would lead to a higher premium, hence a higher break-even point. So this is why sometimes some people, right, they may find that a higher break-even price deters them from purchasing the warrant. But it is important to remember that warrants are meant as a trading tool. It is not meant to be held until maturity. So the break-even price here should be in terms of your hierarchy, it should be the bottom few where you consider, okay? So from this warrant terms here, 3 things that I would say that you have to consider when you want to select your warrants. Number 1, sensitivity. Because as a trader, you want a warrant that is sensitive to the underlying share, or some people may call it mother share. Number 2, effective gearing. So effective gearing essentially here, C82 has 2.2 times while C87 has 1.9. What this means is for every 1% move in UMS share, C82 will move 2.2%, whereas C87 will move 1.9%. So the second part of this is effective gearing, because you will want a warrant that provides you a leverage, a higher leverage. There's no point of purchasing an effective gearing of 1 times, because when the underlying move 1%, your warrant also only move 1%. So you are not gaining leverage out of this. So sometimes people are comfortable when they see effective gearing between 3 to 5. Anything higher, right, would mean that your gearing itself is too high. And gearing works as a double-edged sword, because if it moves 1%, you have an effective gearing of, let's say, 10 times, meaning to say your warrant will move 10% for every 1% movement. In your head right now, you might be thinking, it's good, because if the warrant price, if the share price goes up 1%, your warrant will move up 10%. But have you considered if the underlying share price moved down 1%, your warrant price will also move down by 10%. So in this case, effective gearing, you can't be too obsessed of finding a warrant that is too high, because it will work against your trading strategy when your market expectation or direction is wrong. Okay, so there's sensitivity and effective gearing. And lastly, what I'd like to highlight is your expiry. Okay, your expiry date here, especially as a new warrant trader that is trying to get into trading warrants, I would suggest that you look at warrants that has a bit more time to expiry. So at least you can allow your trading thesis or trading strategies to play out before your warrants actually lose out to time decay. Okay, so these 3, we would consider it, we call it SET, S-E-T, sensitivity, effective gearing, and time to expiry. Okay, so it's just really simple to remember. Ready, set, go. So once you're ready to trade warrants, you remember your set, and you go trade warrants in the market on Bursa Malaysia. Okay, so let's move on to some case studies of call warrants. And how many of you have noticed that Tenaga has moved up quite a bit late of last year, which is about around November 2022, and it has a sharp spike of share price movement end of last year. So if you look back, Tenaga actually announced its third quarter 2022 financial results on 23rd November. And it actually showed that electricity demand in Malaysia expanded 8.1% year over year, a significant increase compared to the 0.6% year over year growth during the year before. So if we all remember, 2022 isn't that far back, is that Malaysia started to reopen, economy started to reopen. People are going out more often, they are going to shopping malls, and this requires energy, right? While they are dining out in restaurants and in F&B. So in their earnings report, they actually said that there was higher demand across all sectors because of this border economic reopening. So let's just say you enter into this 24th November when the underlying share price is at 8.91 ringgit and the warrant bid is at 18 cents. And you fast forward to, just a moment, sorry. And if you fast forward to 27th February, you can see that the underlying share price was at 9.64 ringgit. So typically, blue chip stocks in Malaysia, or should I say, the KLCI components, the top 30 companies, they typically will announce their fourth quarter results around February. So if you have that in hindsight, you would sort of take into account that usually after earnings, market will react because of what the company has to say in their prospect. So Tenaga actually mentioned that they are cautious due to challenges like high fuel prices and inflation. And if some of you remember, that was when there's a geopolitical tension, there's war happening around, and there's a sudden spike in oil prices. So that caused costs for Tenaga to actually run business also to be higher. So between 23rd November to 27th February, if you were to help using the warrant, the call warrant here is Tenaga C1K, you can actually see yourself potentially gaining 33.3%, while Tenaga was at 8.2%. So you can see from a price point itself, Tenaga cost 8.91 ringgit on 24th November. So to buy one lot is 891 ringgit, whereas for the warrant, to buy one lot is only 1 ringgit 80 cents. Okay? And when you were to sell, at the warrant bid of 24 cents. So in this case, you can actually realize about 30%, right? 30% of potential profit using the warrant as compared to Tenaga, where you purchase the underlying share for close to 1,000 ringgit for just one lot. Okay? But it is good to note that Tenaga is a defensive counter. It pays dividend. So if you are in it for the long term, you are a fundamental investors, then Tenaga as a blue chip company would serve the purpose. But here's the thing. If you have a view that Tenaga share price movement will go up in the near term or the medium term, then you may consider Tenaga C1K as a tool for you to participate in the trend, right? While maintaining Tenaga in your portfolio. So you're not selling your Tenaga away, so you still enjoy the dividends, corporate actions, bonus issues, or whatever it may be, while yet you are able to participate using Tenaga C1K. Okay? So this is one example of a call warrant case study. And next we have MBSB. How many of you here have followed MBSB news that they were going to acquire MIDF, right? I think quite a number of us actually knows MBSB is going to acquire MIDF, and they will form as, if I'm not mistaken, the top 3 largest Islamic bank in Malaysia. So if you follow Bursa's website and you go to the company announcement page, you can see a lot of companies making their announcement over there. And MBSB actually made an announcement to Bursa on 14 April, second quarter this year, that MOF, which is the Ministry of Finance, has granted the approval for the acquisition of MIDF Investment Bank. And this actually got the market a bit excited because it is finally approved. The approval has been granted. And a lot of Malaysian banks has started to rally because some analysts or some research house actually views that the Malaysian bank is actually quite insulated, or how do I put it? It is separate from the regional bank collapse in the US. So in anticipation of that, MBSB also announced their financial results on 25th May, posting an improved profit after tax of 27.3% year over year. And the Edge also reported that Datuk Wan Kamaruzaman Wan Ahmad, which is the former CEO of KWAP, is tipped to be the chairman of MBSB and MIDF. So having a new management, a new leader to spearhead that merger actually was a good news for MBSB, and the market obviously reacted that way. So you can see that MBSB underlying price was 60.5 cents and the warrant bid was at 6 cents on 14 April when the announcement was made that the approval was granted. And once the Edge reported that industry sources has reported the former CEO of KWAP is tipped to be the chairman, the share price also went up to 71 cents. So in this case, you can see that MBSB warrant C53 went from 6 cents to 12.5 cents. This gives you 100% potential profit or 100% return in your capital. So this is because warrants, even though if you look at MBSB, is cheaper from a price point, but it lacks the leverage factor of it. Okay, so unless your share account, your share trading account has share margin financing or even a contra account, then maybe you can use a bit more capital to purchase. But with that being said, you are potentially due for margin call if the direction works against your favor. But for call warrants here, for example, especially when news are not announced yet, there is no clarity on whether approval is being granted or not, you can actually consider or may consider MBSB C53 as a tool in your investment portfolio to participate on that potential news. So this MBSB C53 is suitable for the risk taker, because they are waiting for potential news like this to actually be announced in the market and waiting for the market to react. So in this way, you may limit your capital at risk, but yet still express your bullish view that MBSB will eventually get the approval granted from MOF. Okay. And for this one, put warrants. Okay. I hope most of you know here today that put warrants, the value goes up when the underlying share price goes down. And late last year was when the Federal Reserve hiked at an accelerated rate, 75 bips, 75 bips, 75 bips. And that caused the tech sector in the US to fall. And similarly in Malaysia as well, where our semicon industry was also hit. And you can see that it is reflected at its second quarter 2022 financial results. And it saw revenue decrease and also profit after tax decreased 13.8%. And also late last year, the World Semiconductor Trade statistics was released, and the semiconductor market globally is expected to decline 4.1% in 2023. And with the US hiking their federal rates, Bank Negara also hiked OPR to 3% on 3rd May, bringing the OPR back to its pre-pandemic levels. Okay, so for tech companies, for growth companies, when interest rates goes up, it affects their free cash flow, right? Their discounted cash flow, because interest rates means borrowing cost is higher and cost of doing business will also be more expensive. And in this case, you can see that from 24 February until 23rd May, right before their third quarter earnings will be released, you can see that the gray color lines behind is the underlying price and the yellow color line is the warrant price. So you can see that right before earnings was going to be announced, market was already anticipating, because the US have already reported some of its earnings from the tech companies and results weren't that great. and you wanted to use or short this underlying, but on Bursa, there is short selling, but it's only for intraday short selling. And intraday short selling, you have to, correct me if I'm wrong, you can only open at 9 a.m. and you have to close it, if I'm not mistaken, 3:30. So for you to play out your investment idea from 24th February until 23rd May, a tool that allows you to do that would be Inari HB, which is a put warrant. So in between these 3 months, 24th February to 23rd May, Inari witnessed a 12.2% drop in share price, whereas Inari HB, because it's a put warrant, witnessed a 28.6% gain in its price. So this is how you can actually use put warrants to express your bearish bias against the market. Okay. And another put warrant I would like to share here is MyEG. And we know that MyEG, start of this year, it was reported that JPJ was working on an app for online renewal of driving license. And also there were news that the immigration department will take back all its immigration services. So that was reported over the weekend. And when MyEG was trading on 7th February, if I'm mistaken, it was a Tuesday, right? MyEG hits limit down, okay? And this is a very sharp share price swing, okay? And you can see that earlier in the year, MyEG price almost was 95 cents. It had quite a strong trend up to 95 cents. But what if you are a contrarian investor? You have a view that, you know, MyEG outlook, its business prospect may not be that great because maybe you've heard of friends discussing it, or you've heard somewhere or read some forums that there is potential that the government body such as JPJ is looking to reduce the use of physical road tax and to use e-road tax instead. So in this case, you can see that I'm sorry, on the right here is wrong. You can see that the MyEG share price went from 83.7 to 60.4. So 60.4 divided by 0.837 minus 1, it's about a 27.8% drop, okay? But for the put warrant, it was a 34.6% gain, okay? So these are some of the local call and put warrants that I'll like to highlight that is quite recent, and maybe you can use this as a case study and you can backtest some of the levels. If you have some technical analysis done over this underlying, you can use technical analysis to actually backtest it and see whether these warrants that I've mentioned would have actually worked in your market direction, okay? So on top of the local call warrants and put warrants, there are also other type of structured warrants available on Bursa Malaysia, because the more variety will lead to more opportunity. So right now in Bursa Malaysia, structured warrants aren't only issued over the local names, but of course also foreign shares such as the US and Hong Kong. And this provides investors like yourself access to foreign underlying share performance through structured warrants just by utilizing your local CDS account. And I also would like to point out that there are the index warrants that is highlighted in blue, which is the HSI, the A50, Hang Seng Tech, Dow Jones, Nasdaq, SP500, and of course, our FBM KLCI. So one thing to note that these index warrants, okay, Hang Seng Tech, Dow Jones, Nasdaq, and S&P 500, they track the futures except for the A50 China ETF, okay? This actually tracks the ETF that is listed on Hong Kong Exchange, okay? This is listed on Hong Kong Exchange. And I believe that most of you here today are quite familiar with the Hang Seng Index, with the famous names such as Baba, Tencent, and also maybe BYD. But maybe not so on the US indexes. So for those who are not familiar with the US indexes, such as Dow Jones, Nasdaq, and S&P. Let me quickly run you through the three major indexes, okay? So the Dow Jones Industrial Average Index, also known as DJIA, is a gauge that considers the prices of 30 leading US companies, excluding transportation and utility sectors. So this index encompasses a diverse range of industries, and also, apart from being a globally renowned stock indicator, it is also extensively cited to reflect the US stock market dynamics. So this is also one of the oldest yardstick of the US market, spanning to over a century. And as for Nasdaq, where we've seen it rally quite a fair bit year to date, it is also known as NDX, its abbreviation, and it stands out as a prominent index representing the large cap growth companies globally. It hosts some of the most innovative companies such as Apple, Google, Intel, and Tesla. So this index, Nasdaq 100 index, encompasses 100 of the largest non-financial US and international enterprises, okay? It is non-financial, yeah, which are listed on the Nasdaq stock market, selected by their market value. So the composition actually spans diverse industry such as computer technology, software, telecommunication, retail, wholesale trade, as well as biotechnology. So one thing to remember is that Nasdaq excludes financial and investment firms from its components. And of course, lastly, we have S&P 500, also known as Standard & Poor's 500 Index. This is actually a widely recognized as the premier indicator for evaluating major US large cap stocks, and is amongst the most closely watched equity benchmark globally. And as of December 31st, 2020, more than 13.5 trillion is used as a reference against the S&P 500. Okay, and this S&P 500 comprised of 500, okay, 500 largest enterprises listed on both the New York Stock Exchange and the Nasdaq. So the notable names are like the usual suspects such as Apple, Amazon, Johnson & Johnson, Microsoft, and Meta. So this index, S&P 500, paints a comprehensive picture of the market performance. So now that we know the other types of structured warrants available, and it allows you to gain access to foreign underlying, but as to everything that is available to us, there is pros and cons to it. So let's just weigh the advantages and disadvantages of it in order to make a better informed investment decisions. So the advantages of using US and HK listed structured warrants is that by just using a local account, investors like yourself can benefit from lower stamp duty at 0.1%, capped at 200 ringgit, and brokerage fees are also generally lower compared to foreign trading accounts. And number two is that investing in ringgit eliminates the need for you to convert your currency, which can be costly and time consuming. So this allows you to gain exposure to top US HK listed companies with a lower capital outlay. And of course, with the active market maker for these structured warrants in the market, you can benefit from the continuous bid and offer, and also the volume throughout the market making hours. So the availability of a live matrix for these foreign underlying structured warrants promotes transparency as well, allowing you to time your entry and exit points more effectively. Whereas for the disadvantages, you need to be aware or have access to the US and HK market research, or have a good understanding of the underlying assets in order to make informed decisions. A lack of knowledge about the US and Hong Kong underlying assets can lead to poor investment decisions. And number two is that you have to be aware of the delay in the US and Hong Kong share prices feed that's available on online websites and even on Google search engine results page. And of course, lastly, there is a severe weather arrangement for the Hong Kong Stock Exchange, because Hong Kong Stock Exchange may suspend trading in the event of a severe weather. So therefore, investors must be prepared that the Hong Kong Exchange may halt trading session for the day if there's an announcement of severe weather. So all you need is actually a local CDS account, and you will actually see the similarities and differences here. So US and Hong Kong, of course, US will track US listeds, Hong Kong would track Hong Kong listed. Both of it is settled and traded in ringgit, stamp duty 0.1%, capped at 200 ringgit. And the settlement style is cash, European option style, just like the Malaysia local warrants. And as for the live matrix, some issuers have live matrix available for both of it. And one difference I want to bring to your attention is the market making hours. That's a clear difference between the two, because although the Hong Kong structured warrants are listed on Bursa Malaysia, the market making hours for Hong Kong is different because it will follow the Hong Kong market timing. So Hong Kong market opens at 9:30 to 12, and we have a break between 12:30 till 2:30, whereas Hong Kong markets reopen from 1 onwards. So there is a timing difference, and since Bursa, we are listed on Bursa Malaysia, we will be adhering to the second session starting hour. So in this case, for the second session, you may notice that the hours for you to trade for the second session on Bursa Malaysia is shortened. Okay. And as for the US one, it remains the same hours as Bursa local shares, which is 9:01 to 12:30 and 2:31 to 4:45. Okay. So in order for you to really understand this, is that you can take a screenshot of this and just note of the market making hours, because you may still be able to trade these warrants when Bursa is open, but we as the market maker will not be placing our bid and ask prices and volume outside of our designated market hours, because you may be potentially buying from other participants in the market when it's outside of our market making hours. So one last example I'd like to share is Tesla C3. So Tesla, of course, for you to buy one share, it costs you $166 US. But by using Tesla C3 as a call warrant, as a tool for you to gain exposure, your capital at risk is also lesser. But one thing to note here, why am I using Tesla, is because the share price of Tesla we'll be referencing is the prevailing market price, whether the closing price or the post-market prices. So throughout the day on Bursa Malaysia, you may notice that the bid-ask is fixed throughout the day, and there's rare cases where the bid-ask would actually move throughout the day. And you may ask that 4 p.m. Malaysia time is when the US pre-markets actually starts to open. Will the warrant price track that? The answer is no. We will always be taking the day before prices. So in this case, the US warrants listed in the market is much more for a longer period of time. You can't intraday the US listed warrants in this case. So obviously, from this example, you can see that Tesla actually had a really good rally up, because after Elon Musk purchased Twitter, a lot of Tesla investors felt like Elon Musk is stretching his resources too much. And when he announced that he has appointed a new CEO, Elon Musk will be able to free up his time to focus more on Tesla. And more positive news came in when Elon Musk visited China, and China foreign ministers told him that China is committed to improve the business environment for the investors. And of course, just last month, they announced their quarterly results, which were record sales of 466,000 cars delivered. So on top of the good news, and good news again, Tesla share price actually went up 69.8%, while Tesla C3 went up by 136.6%. So all in all, this is in essence how you should view the utility of structured warrants in the market, be it call warrants or put warrants, because understanding structured warrants, knowing your market direction, and knowing which warrant to use at which time and which one to select will essentially help you to supercharge your investment throughout your trading journey. And that's all from me. And now it's time for the Q&A.
Thank you so much, Tucker, for doing this session for us. I personally like the session so much. I especially like the quadrants that you do to compare different type of warrants that are suitable for different type of traders. And also like how you talk about essentials of the warrants, understand when you compare the two warrants and how do we make better decisions by buying different warrants. If you have any question to ask our speaker today, please write them at the Q&A box, not the chat box, so we can better manage your questions. All right, so we have, say, 15 minutes left for the question and answer session. So Tucker, just now you promised to address this question. Are warrants the same as options?
Yes, thank you very much, Shin, for reminding. So are warrants same as option? In a nutshell, yes, warrants are the same as options, but one important difference for you to understand is that the structured warrants listed in Malaysia are European style and is cash settled. Whereas the options, or sometimes you may find online on maybe some social media platform where they talk about options, they might be referring to American options, whereby it is OTC options, exchange traded options, where it's American style and is physical settled, meaning to say there is exchange of shares rather than cash. So for Malaysia, structured warrants is very important to remember that it is European style, only exercisable at maturity, and you won't be receiving shares when you exercise it because it's only exercisable at maturity, and cash settlement is only due when it's in the money. Okay?
All right.
I hope that answered the questions.
These are some small differences between options and warrants. All right. The next question is by Pradip Nara. Hi, Tucker. Could you explain in what instances do a structured warrants not trade according to the live matrix? I noticed that the HSI CRF pricing is not following the live matrix lately. Is it due to being sold out of inventory?
Okay. For this, I may not comment, but from my understanding, because HSI-CRF is not issued by us as an issue house, but from my understanding, when it doesn't follow live matrix prices, it could be due to several reasons where they are rolling over the future contracts for HSI. Because important to remember that the index warrants for HSI is actually referencing the futures and not the spot. So maybe it is that the contract that they are referring to is expiring, so it's not following the live matrix, or like what you mentioned, it is low inventory or it is sold out, hence it is not following the live matrix exactly. So it's important that you actually revert back to the issuer of this warrant to understand why is it not following the live matrix. It is best to get an answer from the issue house themselves. Okay.
It's best to refer to the issuer that issued this. The next question is by Lim. For the US warrants, the US market is not open during the Asian time. So how did this, foreign underlying warrants track the US mother share and move accordingly? And how do you do the hedging?
Okay, great question actually, to be honest. For the US warrants that are listed in the market, you are right that the US market, for example, right now, the US market is actually gonna open. Pre-market is already trading. And when the Malaysia market open tomorrow 9 a.m., what price is it referencing? The price that is referencing is tonight's price, which is until 4 a.m. Later on. So meaning to say there is a time delay, meaning to say tomorrow's 24th August, but the US warrants listed on Bursa will be taking the price from 23rd August. So in this case, the warrant tracks the mother share based on only one prevailing market price, which is the closing price, for example. So for you to actually participate in the share price direction is that you have to buy the warrant and you have to hold it for several days. If that makes sense, right?
So, sorry, I don't really. Tucker, are you there?
Yes, yes. Hi.
Okay. Yeah, I don't really get you. Could you elaborate a bit? You mean tonight? So tonight US market is open.
Yep.
So tomorrow you'll be tracking the price tonight.
Correct.
Then
So
the investor will have known what is the movement of the Tesla shares for tonight, right?
Yeah. So that's why when the bid and ask of the US warrant will only be one bid ask level, meaning to say from 9 o'clock, 9:01 when we place our bid ask, it's only at 10 cents and 10.5. It wouldn't follow the opening price and the price movement of the US shares overnight. We are only taking one final price of the US share, and that is the reference price that will market make throughout the day. So the bid ask wouldn't move.
So that means the warrant price will go flat for the Asian hour.
Yes.
Right. Then the next day it will have movement. So it only move during the opening price. Are you saying that?
Will move during the opening price. Yes, you can put it that way.
That means 901. At 901, the price will move. After that, it will stay the same for the next few hours.
Yep, until the trading day ends. So sometimes if there are savvy investors, they will notice that the pre-market actually opens at 4 p.m. So if you are aware that there is always this convergence of prices, if pre-market it opens higher or it opens lower, it's a precursor of how the share price or how the share will trade throughout the day. You can actually use that to your advantage, for example.
So savvy investor could refer to the pre-opening price for the American stocks and to place the trade between 4 to 5 p.m.
In essence, yes. Right? If you
they take a cue from that lah. If
you take a cue for that.
Pre hours would mean that the price will go according to the pre-hours movement during the opening hours lah.
Typically in the US, you will see that it's like a precursor because especially they have the earnings season. They have before the open, during market hours, and after close. So they can actually release the earnings between any of this time, right? So the pre-market open can give a precursor or sort of an indicator of how the share price would open throughout the whole day, right?
Right. So how do you do the hedging?
For this hedging is because us as an issuer, I'm not sure about the other issuers in the market. We actually have inventory of the US shares in the market. So we are able to issue call warrants in this case for the likes of the names like Tesla and even Grab. Grab is actually announcing their financial results today before open. So, potentially something underlying that you can look out for. And tomorrow you can look out for the Grab warrant available on Bursa Malaysia.
Oh, okay. There are Grab warrants available on Bursa Malaysia. I believe issued by you, right?
Yes.
All right. Interesting. The next question by Jonathan: what are the differences between H and W warrants? I guess you can talk about between H and C also.
Okay. So I think this is a very common question that we get from investors. So it's good that you actually ask and clarify before you begin your warrants trading journey. So for H, it's for put warrants. My apologies. I forgot to mention that the put warrants are denoted with a H, whereas call warrants is denoted with a C. So now you may be asking, W denotes what? So you can see in the market that there is WA, WB. These are actually company warrants, meaning to say these warrants are issued by the company themselves. Okay. So what this means is that for the company warrants that is issued on Bursa Malaysia, they are American style and it is physical settlement. So why do company actually issue company warrants? So this is actually to reward their shareholders for purchasing their shares. So sometimes you may see that some companies, after their financial results, They actually give dividend bonus issue and maybe even sometimes company warrants to reward shareholders in that way. So you will notice that company warrants typically have a longer expiry date of maybe 3 to 5 years, and the exercise price is deep out the money as compared to the current market price. Why? Because the company wants you to purchase their share in the future in the next 3 to 5 years. So of course, when a company is well managed, well run, posting profits quarter after quarter, the share price will reflect that positive performance. And you, as an investor with a company call warrant that is given to you, which allows you to buy at the exercise price, will become valuable when the market share price goes above the exercise price. So you have two options in that case, is to either you exercise the company warrants to get the shares in return, or you sell it in the market. But an important thing to remember is that company warrants in the market has no market maker and is solely dependent on the natural supply and demand of the market. So sometimes even if you want to offload maybe 10,000 units of company warrants, but there is no buyer in the market to absorb that 10,000. So you may find yourself in a difficult situation to offload that position.
Thanks, Tucker, for the clarification. The next question is by Wei Chen. How do we determine and where can we refer to the sensitivity of structured warrants?
So for the sensitivity of structured warrants, I believe that most of the issuers, there's currently 7 issuers out there in the market, they actually post their warrant terms, right? And even if you don't go to the issuer's website for their warrants that they issue, you can go to the other issuer's website and you use their warrant search, which is basically a search engine for all things warrants. You can see the indicative sensitivity of the structured warrant. So if I may, for example, like Maybank IB, Maybank Warrants website, we actually don't just show our own warrants, but as well as the other warrants out there in the market, because we would want investors like yourself to actually make a better informed decision and to actually select a structured warrant that is much beneficial and proper and fitting for your investment strategy.
Yeah, for a better demonstration, maybe you can take us to your, warrant search website for us and do maybe a quick demo.
Oh yeah, sure. Just a moment. Let me just quickly share my screen. Okay. All right. Do you see it?
Yes.
Okay, great. So this is Maybank Warrants website, and you can actually search here if you have, for example, like I mentioned, Grab. So you can see there's Grab C1 here. Whereas if you want to find out what are the sensitivity of all warrants in the market, by default, this warrant search page will show Maybank issued warrants only by default, okay? But this can be fixed when you use the filters here. So you can remain the underlying the same, but if you go to this one and you select all issuers, okay, just a moment. Okay, you may see that there is 931 structured warrants found. So here you can go down and you can find for the other issuers warrants, and you can of course sort by sensitivity as well. Yep, just a while. Yep. Just a moment. Yep. So sensitivity here, you can see that I sort it from ascending order, which is lowest to highest. And MRCB C84 is one of it at 0.6, and you can see 1.2. So for this page, the default one is that the Maybank warrants will always be shown first before showing the other issuer ones. But if you want better customizability, is that I suggest that you click this download export as CSV. So once you have done that, you actually will be able to export this into an Excel file where you can filter and you can delete and remove warrants that you don't want to see, that is actually noise when it comes to your selection process, right? So just let me quickly share my screen. Okay, can you guys see the Excel file?
Yes.
Okay, great. So you can just make some quick amendments, add a filter. And let's just say, for example, these are all the issuers here, am I right? And expiry date, you want to sort, for example, oldest to newest, meaning to say the one that will expire next week. So you can remove all this 28 August, which is next Monday, and this bunch 30th August that will expire on Wednesday. You can remove all this, and because those would expire very soon and the time decay is accelerated. So once you have removed all those, you want to select whether it's call or put. So say, for example, you have a bullish out view, you select a call, and let's just say we are looking at maybe UEMS, for example, again. So you will see all the UEMS warrants available out here, right? And you can sort once again from oldest to newest. So you can see that the C82 is actually expiring 29 September, which is in about a month's time, whereas the C87 is 28 June, and C88 is even further out from expiry. So when it comes to selecting your warrants, we can perhaps remove this. Okay. And let's just say you have narrowed down into C87 and C88. Okay. So you can see right now, C87 at 55 cents exercise price, it is considered 13% in the money, which is quite deep in the money. And C88 is 5% in the money, which is still okay, not too bad. And sensitivity here in this case, C88 is more sensitive and C87 is less sensitive, because in terms of sensitivity, the higher number of ticks would mean the more it needs, like for example, 3 ticks means 3 cents. So it needs 3 cents for the warrant to move 1 tick. Whereas for the C88, it's 2 ticks, so 2 cents to move 1 tick. So because UMS is actually priced below 1 ringgit, so 1 tick is actually half a cent. So in this case, 3 is basically 1.5 cent, and 2 is basically 1 cent. So for every 1 cent, C88 will move 1 tick. C87, for every 1.5 cent, it will move 1 tick. Okay. And like I mentioned earlier, if you want to compare between two comparable call warrants, C87 and C88, you can look at implied volatility, and the 86 means that the PE, so to say, of this warrant is higher. So the relative expensiveness of C87 as compared to C88 is more expensive in this case lah. Okay. Hope that clarifies and also give you guys some insight into, how you want to actually filter and also make your selection process much more easier by using the Excel.
Yeah, you just make a very interesting statement. You said that implied vote is more or less similar like PE, right?
Yep.
All right. So for those of you who are not really familiar with implied volatility, so what Tucker is saying that is that it could be equivalent to the price to earnings ratio that is imposed on stocks. So you can use it to benchmark whether structured warrants, is it expensive or it is cheap. Am I right?
Yes, that is one way that you can see implied volatility, yes.
All right. So thanks for doing this Q&A session with us. So it looks like we have run out of time to carry on. So for those of you whom we are not able to answer your questions, we apologize first. So with that, I would like to move on to our next agenda, which is to tell you about our next session. All right, just give us a minute.